Good day, fellow investors. Last week we of course discussed Buffett's letter and Berkshire earnings, and there were many comments about the main risk being Buffett's age, as he is 93 years old. I don't think his age is a significant risk when it comes to Berkshire, not because he is going to live forever, but because Berkshire is structured in a way that the businesses would have made that money with or without Buffett last year. However, there is another risk for value investors that we have to discuss, and those are Berkshire's earnings, the valuation, and also the hidden earnings that add to this number, so that you can understand what is the risk and reward of investing in Berkshire. If you look at the stock, the market cap is now 905 billion, and it went just up and up over the last 12 years. So let's now take a look at Berkshire's earnings, explain the hidden earnings that I didn't explain in that last video that adds 8 billion to Berkshire's earnings, and discuss also the businesses there. If you look at what Buffett focuses on, operating earnings, Berkshire made 37.3 billion in 2023. But there are also hidden earnings not reported in Berkshire's accounting statements from the ownership of the stock portfolio. Now, with accounting, if you own between 0 and 20% of a company, then you report just the dividends that you own. If you own from 20 to 50% of the companies, then you report your share in the net profits, your share in the increase of equity. If you own more than 50%, you consolidate everything. So if I look at the ownership of Apple, Bank of America, then I have to calculate those hidden earnings not represented in Berkshire's financials that would be represented if Berkshire would own more than 20% of those companies. Let's take the Apple example that is also the most significant for Berkshire. Berkshire owns 5.55% of Apple. Apple's net profit was 101 billion last year. Now, the dividends that Berkshire gets, those are included in investment income within Berkshire's statement. So we deduct the dividends and then we are left with 86 billion of earnings. Berkshire's share of that is 5.5%, or 4.73 billion is what one should add to Berkshire's net earnings, operating earnings, at the end of the year. Then I have done the same exercise on Berkshire's top holdings, and now I don't know whether this is the equity method or not because it's 20.02, but with or without American Express we are at 1.33, or minus 1.3 billion from American Express, we are at 7 billion. This significantly impacts the operating earnings plus 8 billion. We are at 45 billion for Berkshire. That gives a real price-earnings ratio of 20 and not 25. So this is the real earnings from Berkshire. Buffett also discussed it here and there in his letters. However, we have to look at average earnings over business cycles to explain Berkshire better. And if I look at earnings in the past, 2019, those were 29 billion minus taxes, so around 26 billion. Of course, a little bit less in 2020, then higher, and now at the maximum as insurance and insurance income, because of higher interest rates, did much better. What is the key risk for Berkshire? We discussed that 7 days ago, where we haven't seen a real recession since 2009, 2012. And if there would be a proper recession, then Berkshire's earnings would inevitably be hit. Of course, there is the cash that Buffett would deploy, but that wouldn't change things immediately, surely long term. And if I just estimate let's say there is a hurricane or something, insurance loses 5 billion. As there is a recession, interest rates go down, so there is 3 billion less. Railroad, of course, gets it when there is a recession. Other businesses also. Apple would sell less phones. And let's say that from the 45 we deduct 15 billion, and then we are at a 32 billion, let's say, with hidden earnings profitability. Then we have the P ratio. 42 billion times a valuation of 12 is a market capitalization of 384 billion, which is far from the current more than 900 billion. And if I look at the historical P ratio of Berkshire before the accounting changes, you can see that it goes tops at 20, averages around 15, and then it also hit bottoms of 10 when everyone is saying that Buffett lost his touch or he is too old to do this business, as they have been saying since 1998. So this is for me a key risk for Berkshire, and it is a key risk because if this happens, you are 60% down. Berkshire's business would do even better if this happens and everything is cheaper or 50-60% down. That would be a benefit to long-term Berkshire shareholders. However, if you are investing for 5 years and after 5 years you are down 50%, you would not feel that great from this investment, especially when compared to treasuries, where you invest in the next 5 years, you would not be down, but you would get locked this 4% yearly return at no risk, and in 5 years you'll have your principal and what is this, 25% return. So we have to look at the risk and reward of investing in Berkshire. It is a great business, it is a hedge, it has the cash, it has the right capital allocation attitude, all positives. But at the end, as Buffett said about Burlington, that isn't such a great business, but he bought it at a great price. At the end, it also matters at what price you buy Berkshire. And you can see here that not so long ago, the market cap was almost half of what it is now, and it was even lower in the past with lower price earnings ratios and after the growth. So we might now be in an exuberant period for Berkshire because we are at 20 P ratio, and usually the range is between 10 and 20. There is also the stock market portfolio that would also get hit if something happens, but we have to also speak about the reward. Buffett discussed this in the last letter, and he said that all in all we have no possibility of eye-popping performance. I think that Berkshire will give you from current levels surely 5, 6, 7%, let's say 5% real return and then 3% inflation, that's 8%. If inflation is 6%, Berkshire, as it owns businesses, has some protection there. So 5 real return, let's say 8 long-term good returns, with the risk that it is down 50% if there is a crash, recession, whatever, then you should just add more to Berkshire. And if that is your strategy, as I said, Berkshire is a great buy. However, if you want a value investment, like we discussed in March 2020, then you are looking for Berkshire at a P ratio of 10 on average earnings over the business cycle, because maybe the earnings crash for a year, hurricane, they lose 10-20 billion, and then is the time to buy Berkshire at that P ratio of 10. So that is the risk and reward. A lot of positives with Berkshire. The only negative could be the valuation at this moment in time. I can't predict markets, Buffett can't, but there was also this warning through the letter that it's not the time to do buybacks, that times of panic and crashes will come again, and that is also what he is waiting. Around the world there is much better, much cheaper, so I'm focusing now on that, and who knows, maybe Berkshire will return to my portfolio at the right price one day.